Hello traders, in this video, we are highlighting the various considerations to factor when trading the USD CAD currency pair. Simply said, we are diving deeper into some aspects that traders must not miss as they trade the USD CAD pair in Forex. The USD CAD pair typically represents the exchange rate between the United States dollar and the Canadian dollar. It is a popular choice among Forex traders. This pair is influenced by the economic interactions between the United States and Canada, which are two closely linked economies. For Forex traders, understanding how to effectively trade United States dollar versus the Canadian dollar pair involves comprehending the economic significance of both currencies, the factors that influence their movements, and furthermore, the correlation with various assets, among others. The United States dollar, which is the world's dominant currency, serves as the primary reserve currency for central banks and also is highly involved in most international transactions. The economic power of the United States, which is the world's largest economy, underpins the dollar's significance. At the same time, the United States dollar status as a benchmark for commodities like oil and gold further emphasizes its critical role in the global financial markets. On the other hand, the Canadian dollar, which is often referred to as the loonie, is the official currency of Canada. Canada's economy is heavily influenced by its natural resources and particularly oil, making the Canadian dollar a commodity currency. At the same time, the country's economic health is closely tied to its export sector, with significant contributions from energy mining and agriculture. The value of the Canadian dollar often fluctuates with global commodity prices, particularly crude oil, due to Canada's position as a major oil exporter. Some of the factors that influence the USD CAD exchange rate include economic indicators, central bank policies, geopolitical events, and market sentiment, among others. As such, it is important for traders to understand these factors as they speculate the movement of the USD CAD. To begin with, traders must take note of leading economic indicators including GDP growth rates, unemployment rates, inflation rates, and manufacturing indices, among others. Typically, strong economic data from the United States or Canada can lead to an appreciation of their respective currencies, while weak economic data can cause their depreciation. As such, market participants must stay updated on economic reports and forecasts so as to anticipate or speculate potential movements in the United States dollar versus Canadian dollar currency pair. Another leading factor to put into consideration when trading the United States dollar Canadian dollar currency pair is the central bank policies from the Federal Reserve and the Bank of Canada. Of particular significance are the interest rates decisions, quantitative easing programs, and other monetary policies which tend to drive or tend to cause or lead to currency movements in either of the currencies. Typically, higher interest rates attract foreign capital, thereby increasing demand for the currency and leading to appreciation. Conversely, lower interest rates can result in the currency's depreciation. Geopolitical events are another factor that play a vital role in movement of this pair. Political stability and geopolitical events can cause significant volatility in the USD CAD pair. Traders need to be aware of geopolitical developments and assess their potential implications on the pair as they engage the Forex market, and particularly when they are taking positions or trading the USD CAD pair. Given Canada's significant reliance on natural resources and oil in particular, the pair is heavily influenced by commodity prices. Typically, Rising oil prices generally support the Canadian dollar as higher revenue from oil exports boost the Canadian economy. On the other hand, falling oil prices often tend to weaken the Canadian dollar. As such, traders must monitor global commodity markets, particularly crude oil prices, as they anticipate potential impacts on the USD CAD currency pair. The United States dollar versus Canadian dollar, as we have mentioned, is one of the most traded currency pairs in the Forex market, accounting for a significant portion of daily Forex transactions. This high level of liquidity makes it attractive to traders, providing tight spreads and less slippage as compared to less frequently traded currency pairs such as the miners and the exotic pairs. Typically, the best times to trade the United dollar versus the Canadian dollar pair are during the overlap between the New York and London trading sessions, which occurs from 8 a.m. to 12 p.m. Eastern Standard Time. This period sees the highest trading volumes and liquidity, leading to tight spreads and more significant price movements. At the same time, major economic releases from both the United States and Canada often occur during these hours, which provide numerous trading opportunities for traders. Traders should also always be aware of other significant trading hours, such as the North American session from 8 a.m. to 5 p.m. Eastern Standard Time and the European session from 2 a.m. to 11 a.m. Eastern Standard Time, so as to take advantage of market activity and other news releases that occur during these times. We also have to mention that when trading the United States dollar versus the Canadian dollar pair, it is essential to employ effective trading strategies and risk management techniques. Some of the aspects that traders have to consider as they build an effective trading strategy include technical analysis, fundamental analysis, market sentiment, and above all, appropriate risk management. As we concluded, this paramount to mention that trading the USD CAD pair provides numerous trading opportunities, and as we have mentioned, this is because of the fact that it is highly liquid and there are numerous economic factors that influence its movement, and particularly those of the two economies. As such, traders have to understand the economic significance of the US dollar and the Canadian dollar, the factors that move this or move the exchange rate, and the correlation with financial assets. This will help traders make informed trading decisions as they take their trading positions. Thank you for watching, and let us interact again in our next trading video.